My name is B-Walk and welcome back to Cop Your Coin, where I show you how to cop your coin in the fastest growing market in world history. Today I'm going to briefly talk about the crypto markets as we round out July. We have one more week to go, and just talk about where I think the market's going to be, technically speaking, as well as what we're looking at from a functional perspective, kind of fundamental side. What is the news flow of the day, a couple articles like that. But of course, I'm going to ask you to do three things. I'm going to ask you to hit that subscribe button, hit that like button, and hit that alert button so that you know when fresh content is out from Cop Your Coin. Okay, so let's jump on into it. I always do the coin market, seeing where we are, like the market cap. So looking at Coin Paprika, and it kind of gives me an idea. Right now we're at 265, and as you can see, it's kind of a mixed bag. Bitcoin is just under 10,000. It's probably been bouncing around there for a while. Ethereum has fallen back some. XRP's fallen back some. All altcoins are pretty much falling back. They're pretty much in the same places. And you see Cardano here at the bottom and the 11th rank, just over 6 cents. And you have a couple in here, but everything pretty much has stayed the same. So the market has somewhat cooled off a little bit. As we look at the actual charts, and I'm gonna start here with Bitcoin so we can kind of get an idea there. And as you can see, it kind of got to a point where here earlier in the month, like late June, we spiked to 13, a little bit higher than 13. And then that went as high as, I believe, 13.6, 13.7, and fell back in here, came back up and fell back down. Now that's fine, like I said, because most of the time you're looking for some type of consolidation when you made such a bullish move, and which we did in the month of June. We took off, as you can see. And if we'd have kept going straight up, then it would have been a very strong crash. So it's great that that didn't happen. However, like I said, we're always looking to evaluate how the markets are reacting. Right now, it looks like we're trying to consolidate. We're going to see what happens here. I'm imagining that it's gathering some steam for another push forward. So we'll see, as I'll keep my eyes on it. Let's look at Cardano real quick. And you can see that's come down some. It hasn't secured the gains as much as Bitcoin did. We've come down to, like I said, just under 60 cents. And I think 6 cents, and it was at this high, almost at 12 cents. So we'll see. Again, the real reason for Cardano is not so much technical as it's fundamental. It's a slow grind wheel. And a lot of people like that. I know I am a fan of it. I just want to make sure that they do things right and then keep on progress, keep on track. So as soon as Shelly rolls out here shortly and they get that decentralization in place, I think that you will see Cardano recoup all of this, probably get back up to 11 or 12 cents and maybe even higher, starts to grind higher. So we'll see. As we look again, let me look at XMR. Haven't looked at Monero in a while. Very similar picture to Bitcoin, not as dramatic as the up. As you see, and it's come down some, but it's holding here steadily at about 80. So we'll see what it does. We'll see where it able to settle out. But that was a pretty nice move. I remember, not long ago it was around there. You go, $50. So that wasn't that far ago. That was a few months ago. So it's moved higher, and now it's come back down some. We'll see what it does in the future. Here's another one. This is Ripple, obviously XRP, and you can see this, and again, very similar to Cardano. It moved up high, and it got up about as high, almost to 50 cents, it looks like, and then it pulled back some. So we're sitting there around 32 cents. I imagine, again, this is the calm before the storm, and you will see here in a little bit why I think that. Okay, so just get a picture. You always want to look at the markets and kind of get a bird's eye view of kind of what's going on. And as I said, we can see that it's kind of a mixed bag, so that's okay. We're looking to consolidate, to gather some strength, and I think that going forward, we're going to have some opportunities here. Specifically, I want to talk about this particular article. JP Morgan admits dollars doomed reserve status to unwittingly cheer Bitcoin / cryptocurrency, basically. And what this article is talking about is the fact that the dollar has been losing dominance, and it has been for years. And that is some concern. Basically, the strategists at their private bank said, we believe the dollar could lose its status as the world's dominant currency, which could see it depreciate over the medium term. It's a stark wake-up call, reminding investors that global reserve currencies do not last forever. While the note doesn't mention it directly, Bitcoin is an obvious hedge for many of the issues cited by JP Morgan. The private bank also recommends clients increase their portfolio allocation to a store of value, specifically gold. Arguably, Bitcoin is also becoming a recognized store of value and may deserve a place in the defensive portfolio. And as you can see, this is a chart that kind of looks at the dominance of the dollar, and as you can see, it's gone down. It's in waves. In the 80s, it spiked on down, but the trend has definitely been down. The end of dollar dominance. There's nothing to suggest that a dollar dominance should remain in perpetuity. In fact, the dominant international currency has changed many times throughout history, going back thousands of years as the world's economic center has shifted. And partly this is because the rise of Asia threatens the dollar. Now, what is very ironic about this is the fact that the cryptocurrency arose in Asia, which is funny. Now, they're not talking about that actually specifically being the currency that the countries will go to, but I think it's very interesting and almost apropos, as they say, for this to be the factor. Because for the longest, I felt like Asia was going to increase. Since our 45th president got in there, he's been pulling us back out of a lot of the world markets. Kind of getting this more so on a status of our own country, kind of working on that. But because of that, because we've been being removed from the world stage, I think it's just a continuation of what's going to happen. It says in the coming decades, we think the world economy will transition from a U.S. and USD dominance towards a system where Asia wields greater power. And it says right here that there is less incentive to trade in the USD. According to JP Morgan, Trump's aggressive stance on trade is accelerating this progress. And it is. Now, what does that mean for us? Okay, so the dollar dominance is already declined. Like I said, it has already been happening in 2003. So it was already that it spiked up a little bit. 2007, we had that problem with the real estate, when that real estate bubble, and we had the great, not the Great Depression, but the Great Recession. I guess is what they said. And you can see that the dollar dominance has been decreasing since then. So again, the story of the USD losing reserve status is becoming an ever-growing mainstream finance meme. Investors haven't even started to reposition for this. So making the case for Bitcoin. So where does Bitcoin come in? Well, first, JP Morgan is urging investors to cut their dollar holdings in half. Instead, they advocate a larger allocation to store value assets like gold. Bitcoin arguably fulfills a similar store value function, but with more utility in the digital world. Secondly, Bitcoin is a hedge against the inflationary nature of the dollar and its long-term decline. Unlike the dollar, where the supply is increased at will, Bitcoin has a predictable and fixed supply. That's the key. Thirdly, in the extreme scenario, Bitcoin could fill the vacuum as reserve currency. While governments are unlikely to adopt it officially, companies and individuals may opt to transact in Bitcoin to root around a possible currency war. If nothing else, this is a wake-up call that the global reserve currencies do not last forever. The dollar will be replaced as the dominant means of trade. It's just a question of when, not if. So anyway, this is an interesting article. As I said, just kind of looking at reading the tea leaves, as they say, and you can see that we're going to be shifting from some type of fiat currency. I don't know where we're going to go to next, but I think there's a place for cryptocurrency. And as we see, there's some utility here. There's some top projects. Obviously, the top 10 are working on some real projects, and there's some real opportunities here. So that being said, you need to stay frosty as we round into this end of this week and the end of the month next week, and we're going to move forward into August. I think that there's going to be some volatility happening here shortly. I do expect the currencies to make a rebound. This is an opportunity to go ahead and get into increase your exposure, if you will, or sit tight. It's your call. Okay. But anyway, I want to thank you for joining me, and I'll see you next time on Cop Your Coin.